Hello everyone, we are from Group 15 and today we're going to present about Personal Financial Analysis Report. We are 5 members in our group. Myself, Ramiyah Tamilchelvan, Anggeleswary, Lavanya, Kumutha and Monisha.
My name is Anggeleswary Murugan. My metric number is 264563. I'm going to explain about our client's profile. Our client name is Mr. John. He is 30 years old and is working as a bank manager at Murugan. He is married and his wife name is Mrs. Regina. She is 29 years old and a housewife. They have a son whose name is Bernard and 5 years old. EST means source of income. Its total yearly income is 85,930, including early salary 72,000, early rental income 21,600, and yearly interest income for its fixed deposit around 250 ringgit. He also has three major financial burden, which is car loan with yearly repayment of 9,600 and with outstanding amount 43,200. Secondly, house loan with the yearly repayments 24,000 and balance of 120,000. He also paying his insurance premium 1,000 ringgit. Thank you.
So next would be the analysis of Mr. John's human life value. But before that, let me introduce myself to you, Doctor. Myself, Monisha James, and matrix number is 269492. So let's look into the content. So it is quite impossible for us to put monetary value on a human life. But however, using human life value approach, we actually can calculate a person's life value. So what is a human life value? So a human life value is a current value of a person's predicted future earnings, which will be used in order to assist the dependents in the event of a person's death. So the human life value or income replacement strategy is a way of determining the right amount of insurance that a person should purchase now in the case of future income loss. So in the event of catastrophic occurrence, the family income will be stopped. Hence the family will have a little or no money, which may be insufficient in order to cover their expenditure. So finally, based on the net worth statement, the human life value of Mr. John is around 848,068 ringgit and 30 cents. This is calculated using 62,586 ringgit and 20 cents that Mr. John allocated for his family support for the next 25 years with the interest rate of 6%. So this amount will automatically help Mrs. Regina and their son with sufficient financial security if Mr. John faces any misfortune in the future. Besides, it also helped them in order to maintain their current quality of life, repaying existing loans such as house loan for about 120,000 and also car loan for about 43,200, and achieving long-term aspiration such as their child further education.
Next, I'm going to discuss a recommendation on tax assumption. Before I proceed further, I'm going to introduce myself. I am Kumutha. My metric number is 270230. According to Mr. John's profile, Mr. John is a breadwinner and is the only member to pay his income tax. In order to lighten his financial burden, Mr. John can enjoy tax exemption by claiming tax relief which is set by LSTN, where Mr. John is able to deduct a certain amount of money expended in the assessment year from his total annual income. From claiming tax relief, Mr. John's chargeable income will be reduced and enjoy lower tax rate and pay less in all tax together. The first tax relief that Mr. John can claim is individual tax relief. Mr. John can claim individual tax relief up to 9,000 ringgit as Mr. John's status is resident in Malaysia. Next, Mr. John can reduce his chargeable income by claiming lifestyle tax relief. Lifestyle tax relief is a type of tax relief for expenses on reading materials, electronics, sports equipment, gym membership, and internet subscription for self, spouse, or child. Mr. John can get up to 3,000 ringgit worth of tax relief for lifestyle expenses under this category. Mr. John can claim expenses on purchasing any reading materials or electronic such as personal computer, smartphone, or tablet. He also can claim on purchase for any sports equipment such as badminton racket, soccer ball, or basketball, and claim gym membership for Mr. John, his spouse, or his child. He also can claim for his monthly internet subscription, where he can get tax relief for just paying his monthly internet bills from Unify, Maxis, and so on. Besides that, Mr. John also can claim childcare fees tax relief restricted to 3,000 ringgit for his son Bernard. This tax relief is allowed to claim childcare fees for his son Bernard, who is aged 5 years old and paid to a registered kindergarten or registered childcare center. The last tax relief that Mr. John can claim is life insurance tax relief, where Mr. John is paying 1,000 ringgit annually for life insurance premium. Mr. John can deduct his life insurance premium under life insurance tax relief restricted to 3,000 ringgit. Next, we're going to look into Mr. John's retirement income needs. In order to have a comfortable retirement, Mr. John needs around 80% pre-retirement annual income. Mr. John's post-retirement income needs can be estimated from his pre-retirement income. According to assumption, since Mr. John's annual income is 85,930, Mr. John will obtain 450,000 for his retirement at the age of 55. Based on the calculation, Mr. John can withdraw 37,340.21 of fixed amount annually from his total retirement fund. Using his annual fixed amount, Mr. John can fulfill his income needs by maintaining his standard of living.
It's me again, Anggeleswary Murugan. My metric number is 264563. I'm going to explain about clients' available resources for his retirement. The first resource that available for Mr. John is unit trust. Let me explain about unit trust first. Unit trust is like other mutual funds. It combines money from variety of participants to invest in assets such as bonds and stocks. As the fund makes money, the initial investment will grow over time. The unit redemption rate will represent the accumulation and compounding of invested funds throughout the relevant period when redeeming the units. As for now, Mr. John has invested around 25,000 into the unit trust. So, he can redeem the units and get a lump sum money for his retirement. The second resource that available for Mr. John is Employees Provident Fund, which is EPF. EPF is a kind of saving account for people who are working for encourage them to save money for their retirement days. Each month, employees and employers will contribute a certain percentage of their salaries into the EPF account. Employees will contribute 11% for their salary, and employees will contribute 12% for the employees' EPF account. The funds in the EPF account will earn a fixed rate of interest income which is set by the EPF organization. The employees can withdraw the money from their account, from their EPF account upon their retirement. Mr. John also contributes to his EPF account. As for now, he already has 115,000 in his EPF account. So when he reaches retirement, he can withdraw a lump sum money from his EPF account with the accumulated interest. The final resource that available for Mr. John is real estate property, which is a house he bought mainly for the investment purpose. In general, real estate such as buying a house is a great financial opportunity. If the property's value grows over the time, it can generate ongoing passive income, and it's a sensible long-term investment too. This is when the house is rented out. The owner will receive a steady income for each month, which is called as a rental income. And the owner also can sell the house whenever the market value is high. So he get a lump sum money from the selling of the house. As I said before, Mr. John purchased the house for 200,000, and currently he also rented out the house to a tenant. He is now receiving monthly rental income around 1,800. It can be increased in the future because his house in a key location, so there is many chances to increase in the value and increase in the rental fee. He has two choices for his retirement days: whether he can continue to rent out the house and receiving a steady monthly income for his retirement days, or he can sell out the house whenever the market value is high, so he get a lump sum money from the selling of the house. Okay, that's all from me. I will pass to my friend. Thank you.
Hi, my name is Lavanya Saravanan. My metric number is 265097. I will present for question number 6, which is to assess the client's risk profile. According to our client John, a test was conducted to know the range of his risk taking in investments. So it is came to know that he is a medium risk taker, This is because after the test result came, the total scores that he taken was 12, which is indicate that he is a medium risk taker. So when this shows that most of the investors falls under the modest mindset, which is to want to make money, but they are afraid of taking market risk. Usually, medium-term investments are long-term investments, which the return of the investment will be moderate, like 5 to 12%. So, as a medium-term investor, John could frequently diversifying all his assets. So, for question number 7, which is to recommend suitable investment for client. According to John, our client who is a medium risk taker, so to suggest the available potential investment that he could invest, one of that could be municipal bonds, because municipal bonds is basically a low risk investment, but it is not a risk free investment. That is why it is considered as a medium risk investment. So basically there is not as much risk that we could assume, but there is always risk that we need to consider while investing. For instance, like default risk quite minimal in municipal bonds, but somehow interest rate risk and headlines risk does occur. Other than that, I will suggest John to invest in corporate bonds because it has been always a good platform to invest throughout the history, which also comes with medium risk. So when we talk about corporate bond is basically a debt security issued by a business to the investors, which is secured by the firm's capacity to repay the investors by using their future earnings or through use of its asset in the form of collateral. Thirdly, I will suggest John to invest in preferred stock, where it is a hybrid security that integrates the future of common stock and bonds together. Preferred stock is more flexible to the firm than bonds, thus preferred stock generally pays greater dividend to the investors. Somehow, preferred stock is less risky than common stock, but it is riskier than bonds. And that is why it is falls under medium risk investment.
Hey everyone, my name is Ramiyah Tamilchelvan. My metric number is 264268. Today I'm going to explain about importance of doing estate planning. Estate planning, contrary to the common assumption, is exclusive for wealthy. This, however, is not the case. It is initial for everyone. Estate planning is extremely important. The first significance of estate planning is that it safeguards the young inheritors. The age difference between our client Mr. John and his children might be significant at times. Mr. John is always concerned about his children's future. Perfect estate planning is the only way to ensure a secure future for young children. Parents know what best for their children. If parents die before they become 18, they can appoint a guardian for them. The second one is estate planning helps to protect Mr. John's property. More than merely safeguarding asset for his heirs, estate planning is helpful. It also aids in the protection of current asset. When it's come to estate planning, Mr. John should seek a guidance of experienced attorney. Following that, Mr. John and his lawyer must review all of the wealth paperwork. As a result, he will properly inform about any legal issue or lawsuit that may arise. He may either repair it right now or get ready to combat it properly. In summary, estate planning will offer a good start to dealing with issues like this. Furthermore, by doing estate planning, Mr. John can avoid probate. Making sure Mr. John's estate does not go to probate is a wonderful method to minimize family discord. Probate is a court-supervised process of satisfying his will, if he has one, determining the worth of his asset, paying any outstanding debts and tax, and distributing the remainder of Mr. John's asset to his legal heirs as determined by the court. Last but not least, Mr. John can avoid a family mess when doing estate planning. Have you ever had a family feuding over a loved one position after he or she passed away? It's happened more frequently than you may imagine, and you certainly don't want your lack of preparedness is to causes family strife. Mr. John can name someone to be in charge when he dies or he become mentally incompetent while he is still living as a part of his estate plan. Mr. John will also determine who gets what, how they get it, and when they get it. This can assist guarantee that his assets are managed according to his wishes and prevent matters from turning nasty and ending up in court if our family members believe they are were being mistreated. That's all from us. Thank you for watching our presentation video.